I would say you probably shouldn't even buy Bitcoin if your time horizon is less than 4 years, because you're a trader. And if you're a trader, you're probably not going to care about anything that I have to say. You're just looking at whether it's correlated or uncorrelated, and throwing lots of money around without thinking about it.
Michael Saylor has brushed off Bitcoin's drop from 68.8K to 29K, despite the fact that it has devalued the Bitcoin that MicroStrategy keeps in reserve by $4 billion. He is still convinced that a single Bitcoin will one day be worth millions of dollars. Someone asked him if he was concerned about the crash, and he said, "If you had asked Jeff Bezos the same question in 2003 and said, you just suffered an 80% loss in Amazon. You know, Jeff Bezos could have sold Amazon in 2000 and avoided a 95% tax rate. In simple words, he's telling everyone to hold on to their coins for now." In another recent interview, he said that this crash is exactly what Bitcoin needed to see even bigger highs very soon. If you want to hear Michael's comments and everything he thinks about the recent crash, then watch this video all the way to the finish, and don't forget to press the like button and share your thoughts on her interview. Now, let's look at his interview.
Well, I think the significance here is, for the first time in the history of the human race, we develop a technology to maintain a shared ledger without a trusted counterparty. So for thousands and thousands of years, if you wanted to actually keep track of transactions, you had to have a bank or a merchant that kept the books. And the whole idea of Satoshi's was, what if we didn't have to trust a bank or trust a bookkeeper? What if we actually all shared the books and we did it in a decentralized fashion? That's profound, because if you think about what's perfect money, the theoretical perfect money would be a shared immutable ledger telepathically planted into everybody's head, so that all 8 billion people on the planet had the same exact understanding of who owed what to whom. And if you wanted to go one step further, right, the Nakamoto consensus is, we're going to give everybody on the planet that shared ledger. We're going to make it incorruptible, and then we're going to cap the supply of the asset to 21 million. And that makes it ultimately conservative. So that was a profound idea that was offered in the white paper. In essence, it was a perfect money on a shared immutable ledger, and no one had been able to figure out how to do that until Satoshi Nakamoto offered up Nakamoto consensus. So thousands and thousands of times people created other versions, and the question is, which network is going to be dominant? And figuring out which network is going to be the dominant one is kind of like asking the question, which species of small mammal will dominate in North America? Well, yeah, you could launch 10,000 of them, and only one of them can hold that spot in the ecosystem. So it's very Darwinian. And over the course of the next 12 years, you saw other versions of cryptocurrencies launch. And the most famous example of a fight between various cryptocurrencies was the fork wars, or the block size wars. It took place around from 2015 to 2018. And that's when Bitcoin was forked off into Bitcoin Cash and Bitcoin Satoshi Vision and certain other varieties. And the debate was, what's the right protocol? Which one is going to be most censorship resistant? Which one will be most robust, most secure? Which one meets the needs of the market? And what are the needs of the market? Does the market value hard money? Or does the market value some functional, fast, speedy medium of exchange? Lots of debate. Where we are today is Bitcoin's the winner. And Bitcoin's the winner with 20,000 competitors, and everybody that's launched a clone, or sometimes they'll take it and they'll try to add more functionality to it, or they'll add more performance to it, and all of those have failed compared to Bitcoin, because Bitcoin's protocol is engineered ideally to do the job of long-term digital store of value. So I think that the best way to think of it is Bitcoin has risen through a very Darwinian open competition in the market to be the most robust, most secure, most accepted, most trusted digital asset network in the world. So Bitcoin is special in the entire crypto ecosystem because it's generally acknowledged by everyone to be property and not a security. And the things that make it property include the fact that there isn't a central group of founders, no one controls it, there's no leader, there's no entity that benefited by launching it. And the fact that the Satoshi coins never moved imply that Satoshi gave this as a gift to the world, as opposed to Satoshi was a business person launching a company with a company equity for the benefit of a small group of people. I would say you probably shouldn't even buy Bitcoin if your time horizon is less than 4 years, because you're a trader. And if you're a trader, you're probably not going to care about anything that I have to say. You're just looking at whether it's correlated or uncorrelated and throwing lots of money around without thinking about it. I think if you're really a deep thinker or a macroeconomic investor, the bigger issue is we have monetary inflation. The money supply or the currency supply is expanding. I think the news today in Turkey was 70% inflation in Turkish lira. We probably got something in the range of 15 to 20% currency inflation in the US dollar and the euro. We've got 40% inflation in like an Argentine peso or more. So what you have is an inflationary environment. We know the CPI, which is a manipulated measure of inflation. It's actually the lowest inflation that one could reasonably measure, I think. It's like 7.5%, 6.5%, 7%, 8% in the US and Europe. And these are 40-year highs. So the CPI is 8%, but the actual asset inflation rate is double to triple that. So the reason that interest rates are going up is because there's pressure on the central banks to get inflation under control. And their one tool to do it is raise interest rates. But they're not going to stop the inflation because the inflation is caused by excessive money printing, budget deficits, and the wars and political policies, domestic and foreign policies, and these policies continue. So given the fact that we have an expansive currency environment, and what you can see is the price of food and energy and scarce resources keeps going up, the question really is, if I have some money, what should I invest in? And the answer is you don't want to hold currency because the currency is collapsing in value. You know, the US dollar's lost 99.7% of its value over 90 years. I mean, and that's the winner. The losers are losing 99.9% of their value over 100 years. So the currencies are all collapsing. So I don't want to hold the currency. I don't want to hold bonds because bonds are currency derivatives. I'm going to basically, you're going to give me $1 million and I'm going to give you interest on the $1 million at 3% for 30 years. And I'll give you the $1 million back. And in 30 years, the dollars will buy 10% of what they buy right now. So that's even worse. You don't want to hold a value stock that it's valued on cash flows, because if a stock is valued on cash flows without growth, it looks just like a bond, right? It might be slightly better than a bond. But if the currency is losing 10% of its value a year and you can't raise your cash flows or raise your prices, you have to increase your cash flows 10% a year to offset a 10% currency collapse, right? So when the currency is collapsing at 70% a year, like Turkey, the company you own has to raise its prices in Turkish lira 70%, or sorry, you have to raise your prices by an amount such that your cash flows would increase by 70% so that you hold parity in value. So equities are currency derivatives, partial currency derivatives. Bonds are almost complete currency derivatives. Commercial real estate is a partial currency derivative. The currency is currency derivative, right? It's a full currency derivative. So what do I own? And the answer is I want to own scarce property, scarce desirable property. What is it that you own that an affluent, intelligent person will want to buy from you in a decade? That's the question you have to ask yourself. So if you're owning things that will last a decade, right? I mean, if you buy a car that's not going to last a decade, it's not really an asset, it's depreciating. But maybe you own a sports team or a Picasso painting. I don't know. Will people want to buy gold from you in a decade? Will they want to own the building that you own in a decade, right? Will they want to own the intellectual property rights? Well, it all depends. Bitcoin is scarce desirable asset because it represents digital property. If I own $1 million worth of buildings in Moscow in a decade, who's going to want to buy them from me? Presumably affluent, intelligent Russians. But will an affluent, intelligent British person or Chinese business person or American want to own that asset? The same is true. You own $1 million worth of buildings in Nigeria. Who's going to want to buy them in 10 years? Who's going to want to buy what you own? If you own $1 million worth of Argentine pesos for the next 10 years, they're going to be worth $10,000, right? So you're not going to want to own that, but owning $1 million worth of buildings in Buenos Aires is only going to appeal to someone that wants to live and work or use that real estate in Buenos Aires, and you're going to pay the tax and the maintenance cost in between now and then. So interest rates are going up because there's macroeconomic headwinds blowing. The real problem is inflation. If inflation's running 20% and the interest rates go to 2%, they're not going to stop the problem of currency collapse. They're just going to create a near-term turbulence. And if you're a trader, you may get caught in that turbulence. But ultimately, if you're an investor and you're concerned about preserving your wealth to give to your children or your grandchildren, then whenever you're in an inflationary environment, your strategy is simple. I have to convert my weak currency into a strong currency. Ideally, convert my weak property into strong property. And that strong property, I want to move out of the country. I want to move it out of the jurisdiction of a politician that may confiscate it or tax it away, right? And that's why, converting $1 million of pesos into $1 million of dollars in Buenos Aires won't help you, because eventually the politicians will freeze your bank accounts, convert it back into pesos, and devalue it 20-1. That won't help. Right? Converting $1 million of pesos into $1 million of dollars and then buying $1 million worth of big tech stocks in the US may be a better idea. If the big tech stocks are monopolies, they'll be able to raise their prices, hold their cash flows, and hold value. Monopolies will be fine, right? What is a monopoly? It's scarce, desirable property. If I offered you a monopoly with unfettered ability to change the price of something that, like oxygen, sell oxygen to New York City, you're probably going to do okay, right? The problem with even monopolies, though, is over time, monopolies get regulated, right? Like in theory, the richest person ought to be the person that sells water in New York City, but they're not the richest person, because the New Yorkers get together and they decide that they don't want the water company to raise the price of water to $100 a gallon, even though you'd pay it if you were thirsty. So what can I buy that's going to hold its value over time that represents scarce, desirable property? Not just scarce, because there's a lot of things that are scarce that aren't desirable, right? Scarce, desirable property. And I think one of the obvious things is digital property, right? If I created a city in cyberspace with 21 million blocks and nobody could make any more, and it was going to last for 1,000 years, and it was the dominant city and everyone wanted to live there, would you want to own one of those blocks? And I think the answer is yeah. And that city is called Bitcoin. And the dollar is inflating at 15% a year, then that means you lose 15% of your wealth every year, which means that over about 4.5 years, you lose half of your wealth. Over the course of 10 years, you lose 80% of your wealth. So it doesn't make a good savings account. It makes a good checking account. It's probably good to have 1 or 2 months of expenses in the dollar. But if you're holding a year to 10 years worth of expenses in the dollar, then in a decade, you're going to be much poorer.